Welcome to the show, guys. This is not going to disappoint. We're going to do a lightning round, and I've come today with some stocks. A couple I've talked about, but a couple others I haven't. I'm going to be giving you some hot picks, investable stocks for 2025. I've got the lines in the sand. I've got the pullback prices for you. But even better than that, I've got the stock squad with me today. Let me welcome to the show Mo and Keenan Grace. You guys know that Larry's tied up right now. Welcome, guys. Thanks for being here today.
You got it. Always love to be here, man.
All right. I have got
some... Thanks for having me on. I always appreciate it.
I thought your mic was muted there, Keenan. There you go. There you go. All right, guys, listen, I'm going to take a quick minute just to talk a little bit about the macro environment that we're in. We're not going to be there long because just like the title says, I've got some stock picks for you guys today. I've been wanting to get into a sector of stocks that I think are going to be huge for 2025. I believe it's going to be a shifting narrative. I know some of you are going to say that you've already been hearing about it, but I think it's going to blow up and it's going to be even a bigger point of conversation really in 2025 and 2026. And that is the area of robotics. And so I'm going to give you 3 stocks that I think fit that category and that you want exposure to. And we're going to tap these guys for some of their picks right now for not necessarily robotics, but whatever it is that they like a lot right now. So we're looking for places to put some money. I've got a dear friend of mine just did some transferring of his 401k, and he's getting things lined up. It's all in cash. And he said, Josh, where should I put this to work? And so with him in mind, I've got some stock picks today, and I'm going to press these guys. And we're also going to do some lightning round analysis. They can go fundamental or technical, whichever direction they want to go with it. But we're going to go through and cover some stocks and some crypto for you guys. Thank you for joining me. Let's just fire up that like button right here at the beginning. Feed the algorithm for me, family. Throw a heart in the comments. Throw a loaf of bread for Mo. Throw the oven mitt in for Keenan, and let's get going. All right, I'm going to kick things off. I'm just going to briefly get, Mo, your reaction on the CPI, right? So tomorrow we get the PPI. And the bottom line is there's a huge problem that we have with the CPI, and that's that there's no longer the number 2 in the percentage. Now that 3 has shown up, it's really hard for me to imagine that the Fed can quickly move towards easing. I think we got to get back under 3, but I'm curious your thoughts on his commentary before Congress today and the fact that we are officially back in the 3% zone.
Hey, thanks for having me on, Josh. Keenan, you know when we get all back together, it's a great day. We're missing someone. We're missing someone out there. And I know Larry's watching and listening. Larry, my best wishes and prayers to you and yours. And now let's get into it. Let's make some money, folks. We're here. Hit the like button, hit the subscribe. And it's been a wild ride so far. And of course, CPI comes out. What do we get? Oh, it's hotter, it's higher, it's horrible, it's the end of the world. Eggs are $85 a piece, you know, and if you looked at the numbers, you had the take-home groceries, eggs made up the biggest part of that issue we had there. You look at housing, that's been a continuing for years issue, and that's not going away. You're not going to say, cross my fingers and make a wish, I found a lamp when I was golfing. No. You can't rub a lamp and hope that housing all of a sudden has enough houses for everyone and the rates come down. And so some of the issues are going to be there. The eggs, obviously, what do we got? The avian flu, they're calling a lot of birds, millions. And so that's going to take time. Now, excuse me.
Bless you.
But when we get out there and we start looking at all this, the effects of the numbers today, not good. I'm looking at the 10-year treasury went up almost 9 basis points. Wow. That's jump.
Huge. That's huge.
And you know what? Crypto went up. That is not supposed to happen. When you have a 9 basis point pop on the 10-year, You're not supposed to see the risky assets jump in price, but that's where we're at. And as you have been seeing in a lot of different plays out there, we have been consolidating. Volume on the bears and the selling off has been absolutely dismal lately. In other words, that's good because they're running out of steam. The sellers have been selling. The leveraged people shorting have been shorting. But now it's getting to a point where you're not seeing this monster sell off anymore. So the data comes out. It's not good. And what happens by the end of the day? A lot of risky assets are green. Now continue on. You guys know, Josh said, what do you think about it? I think it sucks. I think it's no fun. I think we don't want to be in the threes. I think we want to get down to the twos. And I think we will. But I think it's going to take time. And the Fed's not going to all of a sudden start tightening. They're just going to have to relax a little bit. They have quantitative tightening on the balance sheet roll-off. That should come to an end this summer. As that ends and the yields start to drive down, and more importantly, for those getting really macroeconomic here, we got Senator Scott out there rolling with that beautiful crypto stable bill. We get the tokenization of treasuries to drop the yields lower. The housing issue could start to take care of itself. We get the yields down. And guess what pops on that? Well, crypto, risky assets, and other related plays. And of course, look at those mortgage refinance companies as those yields start to come down. Folks, there's so much money to be made out there right now. We just got to be patient, look at the right sectors, rub the crystal ball that they have in DC, or just ride their coattails. But at the end of the day, we can make a lot of money this year, and I'm pretty pumped about it.
Mo, I completely agree with you. For some reason, there's nothing really happening in the market that's scaring me. The only thing I don't love about this market is that we've been going up on low volume and low momentum. But you know what? Low volume can catch up, and so can momentum. And so it's not in and of itself a perfect indicator to suggest that we're going to fall off a cliff. But Keenan, I gotta throw this question out from Pooja Patel said, so if the numbers were bad, then why stocks went up? I agree. It's a great question. I saw that they were going to go up, so I was happy to ride the up train. But it is a little confusing. Why did the market want to buy a hot CPI number? And, will anything change with the PPI number tomorrow?
So just to get into that, right? And this one is on me, right?
Mm-hmm.
You guys can hear me well?
Yes.
Everyone in the chat, I want you to tell me yes or no. Give me a yes or a no. I'll give you a simple question. Do you think the stock market runs the same way today that it did pre-Robinhood's existence? Yes or no? Do you think it's the same now? Yes or no? You think it's different now? So the reason I wanted to get everybody engaged in on this is because in about 2016, let's say 2015, 16, Robinhood, the app, and this is not an endorsement of Robinhood, they have changed the game by adding in retail investors with no commission trading. Before this, we often say we wish our parents would have invested $100 into VOO, into Apple, into many things like that. But before Robinhood, there were more barriers to investing. Robinhood kind of changed the game with the no commission trading. Even though they did some sneaky stuff on the side, that's really what they did. They introduced it to retail traders. So now all of us together are now like a whale. We're like a large investor because retail investors sometimes think very similarly. Like, for example, what happened with GameStop, where they say, hey, let's all buy this. And it's the equivalent of a huge hedge fund trying to buy it because of the amount of dollars being pumped into something at once. So I say that to say, Wall Street now knows that things don't necessarily just run on fundamentals. Here's a great example of that. It can run on just people anticipating that it'll run. So one of the greatest examples of our day is Palantir. When you look at what Palantir earns, when you look at what Palantir, their revenue and their guidance forward, traditionally, pre-Robinhood, it may have doubled from 8 to 16. It may have quadrupled from 8 even all the way up to 32. It may have done something like that. but now it's in the $100 range. Why? Because Wall Street analysts back in the day, they may have got in the anticipation of the revenue, looking at the fundamentals, but most retail investors have no idea what revenue Palantir brings in. They have no idea what Palantir even does, but they know that it's a way to make money. And enough people think that, and it becomes one of those self-fulfilling prophecies. You think you're going to make money with a stock. Other people think they're going to make money with the stock. So then this is like back in the day where people with, I'm talking about economic degrees, people who are licensed financial advisors, they're advertising and advising their people in retirement accounts to go and invest into something, versus you just see it, oh man, Palantir's pumping up. It's $16. It was just $8. I'm going to go and buy it. Now it's 32. Now it's 64. And it's just running up like that all the way into the $100 level. So I say all of that to say the world that we are trading in now is now different than the world that our parents would have traded in, because they needed commission and there were barriers to trading. Now you could just jump in with no experience at all and start trading. So enough people are doing that we can move the market in certain ways too. So now here's the main point. Wall Street anticipates that you think that this is bad news, so you're going to bet against it. And guess what Wall Street likes to do? Believe that you are dumb money. So they want to bet against you. So sometimes when you get bad news, they think, oh yeah, all of the retail investors are going to think this is bad news. They're going to buy puts. And then they're going to smoke you with buying those puts, because they are not even betting with the market. They're betting against you. And this is what continuously happens. So when you see bad news being good, sometimes it's just literally Wall Street just thinks that you're so dumb that they just want to bet against you. Now, this is for my people born in the late 1900s, right? There's this show that I watched as a kid. It's called Dragon Ball Z. And two of the main characters in that show is Goku, the main character, and the side character Vegeta. Some of y'all might have heard them. They were walking down a path, and Vegeta is the more serious character. Goku is the main character, but he's kind of ditzy a little bit in this scene. And they get to a fork in the road, and Vegeta asks, he calls Goku Kakarot. He says, Kakarot, which way should we go? And then Goku looks around. He says, I think we should go left. So then Vegeta says, okay, I'm going right. So then he goes right immediately, because it's the exact opposite of what someone he thinks is dumb is choosing. And that's how Wall Street is playing. They say, oh, you're going to bet down? So just off
it's like that, Keenan.
So that's how it's going.
I love that answer. Let me give you this thought, and I want to address this question. So Bernadette said, Pooja, it increases the chance of interest rate cuts. And actually, that's not true, because if the rates are higher, then it means that he can't afford to cut, because, I'm sorry, if interest is higher, or inflation is higher, sorry guys, if inflation is higher, it means he's got to do something to cool off the economy, right? And so we don't get more rate cuts if inflation's going up. He could even justify raising rates back up higher to slow things down. And so no, a high inflation read does not indicate that rates are coming. Matter of fact, his exact response to it, let me pull this up, was U.S. Consumer Price Index increased more than expected in January, reinforcing the Federal Reserve's message that it was in no rush to resume cutting interest rates amid growing uncertainty over the economy. But here's to Keenan's point, and I want to add to it because I agree. So this is all about the fact that the market trades in anticipation. It trades in anticipation of what the rate will be. It trades in anticipation of what retail will do. And here's what they did. They priced it in already. That's all that happened, guys. They knew this was coming in hot. The trend was going up. They had already given a higher estimation to the rate. And so when we got the higher rate, it had already been priced in. A bad read had been priced in. So because of that, the market was ready to go back to the business of buying, knowing that, as to Keenan's point, is that there's plans later in the year, they're going to lower those rates anyways. The fact that it was coming in hot was already priced in. But let's talk about a stock that something bad is getting priced into it over the last couple of weeks, and that's Tesla. So they've been pricing in the bad on Tesla. It's been in free fall. I'm going to get these guys' opinion, and then I'm going to show you the chart real quick. The fact is, I need to ask them, and don't forget, we're going to get to some hot stock picks here right up next. So get prepared for that. I'm going to share with you some plays that I think there's some meat on the bone yet for these in 2025. But let's talk for a brief minute about Tesla's free fall off the cliff. It looked like it was reaching for the stars, almost up at $500, and it's slowly been entering back into the stratosphere. And I don't know if yesterday it hit ground or not. That's the big question. But I'm going to ask these guys one simple yes or no question. Mo, did you buy any Tesla in this recent dip?
No.
How come?
All right. So what scares me about this is you're losing a lot of the EV things that we had for credits and tax advantages and all that. And I expect it to get worse moving forward. And that's here in the States. Then you go over to Germany. I don't think people realize how big the EU is. And if you go in there and dig through France, the UK, Germany, the three biggest EV markets in the EU, and then you say, well, how did they do, Mo? Oh, let me see here. I got my notes. Germany tumbled 59% in sales for Tesla. Oh, lowest since July 2021. We're going back 4 years. And then we go to France and the UK, 63% down in sales in France. What? 12% down in the UK. The three biggest markets, they're getting hammered. And now you have a tariff war with China, and it's just getting started. We don't know how bad that's going to get. And we know that Tesla, Shanghai, could we have an issue with Elon working side by side with Trump and then getting strong armed over there? Like, there's so many problems that I see here that I looked at other plays, which I'll save and give to you when we get to that, Josh. When you say we got some hot ones, I will release them. But no, I look at the plays and the money I invest, and I say, which one looks to be the one that is so oversold but has such good valuation, it's too good to pass up. And I'll save that one for when you're ready for the good play of the day here. But
all right,
no,
I like it. And
did not buy any Tesla.
I love it, Mo. I appreciate you your candidness on that. And I got to go to you, Keenan. Tesla's come down. This thing was up at $480 plus. We saw it come all the way down to 320 something. Did that give you any incentive? I know you're a long-term investor. I know you do your scalp trades, but I know that you have very strategic long-term investments. Did you have any interest in buying Tesla at these levels?
So the answer is no. It hasn't come down yet to a point where I would buy it, but it's not that I don't think it'll go up. So Tesla still has some catalysts coming forth that are more likely to happen than ever, being the robo-taxi network, being that Elon, it's a double-edged sword that he is getting political in a way. Sometimes it works for certain things and it doesn't work for other things, right? There are people now who have bumper stickers on their cars that say, I bought this before Elon went crazy or something like that. Does that mean that he went crazy or not? That's none of my business. But I do see that people who are now choosing to buy a car based on who the CEO of the car company is, that is happening on a mass scale. So, but the catalyst of the robo-taxi network, the catalyst of the Optimus robot, which if they really crack that would change the world. That would be the opportunity for Tesla to actually become the biggest company the world has ever seen. If they could crack into the humanoid robot system that could have you have an assistant with, let's say, ChatGPT's brain doing things for you and doing your dishes and so on, right? So those things are potentially ahead for Tesla. Who can say when? Who knows? But regardless of the politics, that would make Tesla's price go way up. Now, I didn't buy any because let me tell you something about me. I swear I am the king of getting in sometimes too early, right? So I bought some Tesla. I put in when Tesla was like $18 compared to today's share price. I bought some of it, and then people look back and they say, "Oh man, Keenan, you bought Tesla when it was." And remember, it's like $330 today. So I bought some when it was 18. I didn't buy too much of it, but I bought some of it. So Keenan, oh man, that's crazy. You got in so early and so great. When I bought it at the equivalent of 18, because remember, Tesla's stock has split a few times. So share price adjusted or split adjusted, I bought it at 18. But when I bought it at 18, it then went to like 10. And people don't remember those days. I had bought it at $200 and I put in $250,000 in. And then it went from 200 to 140. The king of getting in too early, right?
I
And now
remember when you bought that, Keenan.
yeah. And now it's 336 and it looks like, oh man, that was just a great buy. But I know there's a great quote. I can't remember who said it. I think it was Warren Buffett. When you get into a company that's good, sometimes it's not about how strong your mind is. It's about how strong your stomach is. Can you handle it? Can you just hold your nose? And I had to hold my nose. I watched my, let's call it 250, turn into like 160K. And then it went up to like 500,000, right? Then it went and doubled. But I had to say, okay, no, this is right. And many of you have had that same experience with stocks, like I said before, like Palantir. Everybody loves Palantir now, right? That it's 100. But when it was $8, when it was $10, $16, and these levels, it had been doing that for like 3 or 4 years. It'd go up to 30 and come back down, go up to 30 and come back down to 8, go back to 30 again, come back down to 8. And we were trading in and out of it. But then once it broke into like 50, we knew this was a change. This was a change for Palantir, but there are a lot of people who held through all of that. And then they're able to really make a lot of money. So I say all of that to say, Tesla at these levels, I'm not buying it. I have enough Tesla at these current levels to justify just holding on to my position and seeing as things change going forward. But for now, there's a decline in deliveries. I think Mo might have mentioned that because there's an increased competition. There's the political side with Elon. There's results that were slightly under Wall Street's estimations. But again, if you don't have a Tesla position and you are looking to get into Tesla, then if you're going to hold it for 10 years, I'm not mad at you for buying it right now at 336.
I think that's very fair. I really liked both of your guys' answers. I'm going to take a sneak peek at Tesla. And you say, Josh, I thought we were talking about robot stocks. And you got to know that Tesla is a robot play. It's the only reason why it shot above $300 to begin with was the opportunity that everybody saw in AI and the advancements of robotics in 2025 and 2026. Now, I think that the market is looking for him to release something, to get something into the marketplace, because there are other companies that already have some profits rolling. I'm going to talk about one of them here in a minute, but let's just consider Tesla part of the robot show that I'm doing tonight with these guys. And I'm going to take you into the Tesla chart. I'm just going to give you a couple pointers of what I see. Before I do that, let me quickly acknowledge, guys, let me ask you guys to get the likes up for me. We're not quite where we need to be based on everybody who's enjoying the show and the content. Thank you guys for all the love that we get. And also, I appreciate all the coffee cups dropped in the chat to let Stock Up with Larry Jones know that we're thinking about him. He's chimed in with a comment, and he said that the LA fires and the tariffs were already priced in. And I agree with him. I just want to remind everybody that Wall Street is 6 months ahead of retail for sure. And they're always investing, looking down the road, 6 months down the road as to what's going to be hot next and what's doing well. And oftentimes, and this was to the points that Mo and Keenan made, oftentimes by the time you show up to the party to buy, that's when they're taking profits. And so
if Wall Street is 6 months ahead, imagine how much Congress is ahead.
Man, they're sitting in the meetings talking about which company's going to get that robot money. Okay, right now the committee's been selected, and you and I were not invited. Let me just pop over. Great point, man. Let me just pop over to the Tesla chart real quick. All right, guys, look at this with me. I promise you that these are the important trend lines. So I want to point this out. First of all, I'm not scared of Tesla, and I'm not scared of nibbling at this price. We have this moving average, and I think that we're going to have some movement similar to that. And I just want to remind you guys that this is already a pretty significant downturn. It's the next leg down. and we kind of hit where we needed to hit. I think it's very possible that we kind of back tested it today. We got very close to 349. I think it was like 345. And I think that we could get rejected after that. And so I want to warn everybody that if we do end up breaking this 320 low one more time, the fact is that you guys can see right here, there's a gap. There's a gap. And there's no consolidation right there. There's no consolidation right there, guys. That means there's nobody holding the line, right? This is going to get flanked. They're going to blitzkrieg right through 324 down to 270. Now, I definitely have this on high alert to buy, and it is my opinion that we could easily chop up here between 324. Like I said, 324 and 349. We could chop up here for a little bit. But there's still a fair amount of concern right now that we could go lower. And I kind of agree with Mo on this point that what is the catalyst right now for this to, go back up to 430? What's the exact catalyst? I mean, the story hasn't changed. We know that they're working on robots. We know that there's some exciting things down the road. Let me show you one more thing. And I, just take this with a grain of salt. So we've got this, what I'd refer to, let me get rid of this. So what I'm predicting is watch this 324. That's going to be if you lose 324, then it's probably a $270 stock. I also would say that we have this to be concerned about, and it's kind of a slanted head and shoulders pattern. And I want to remind you guys how these get played out. You take the tip down to the neckline, and then you take that down. Let me finish this up. You take that down, and it kind of gives you where it would go. Look at that. Isn't that amazing? You take it down to the neckline, and it kind of, let me get that right there. Give me 1 second. Right here. Okay. So it kind of tells you that we can fall into this zone based on this head right here. So based on this head, we can fall into this zone. And so I would say Tesla's still in a danger zone. I wouldn't be shocked based kind of on what Keenan said. If you got a little bit of the willingness to hold this long term, I wouldn't be, shocked if you bought some for your long-term bag. You're definitely buying it at a much better price than a lot of other people at 320 when a lot of other people were up here buying it at 480, not realizing this wasn't going to just perpetually go higher. I believe that one day Tesla will be a $1,000 stock. It's my personal belief, but I think there's some bumpy road between now and then. And Tesla has always given us good prices. So let's just kind of look at this real quick. I mean, right here, it kind of indicates that between now and the next year, we very likely could come back in this general price zone and tap this historic support at some point. I'm not suggesting that we're going to do that right now. I personally don't believe we're going to do that. I personally believe that Tesla has already had a big move down, and the bulls will come in and buy at this level. But I think one of the most attractive buys that we're going to get is going to be this tap on this historic support. And that really could happen anywhere in this range. And so if you're an investor, I would say really everything beneath 324 down to 270 is something to invest in. If you're super greedy and you're willing to let the Tesla rocket ship launch without you on its way to Cash Mars, well then, you're going to wait until it hits this 270 or below, or, that's where you have to decide how greedy you want to get. Sometimes I've waited a bit too long and I've missed it. Right now, I'm feeling a little patient. I'm going to continue to swing trade, scalp trade the options in this zone, but I'm going to hold off a little bit on the shares. Okay,
hey,
yes, sir.
Can you keep the technicals up for a little bit? I want you to go through a few different big tech stocks, right? Let's start with Tesla. Let's go back to Tesla and go to the daily time frame. So everyone watching at home, every one of these candles is going to be significant in terms of being a daily time frame. So what is this red line? Is this a 200?
No, so the red line I put on is simply just a supporting trend line. It has 3 touches on it. It depends on if you want to go all the way back here. Okay. We have.
You turn on the 200 EMA for me?
Yes, sir. Give me a minute.
So I want to actually use this to make a point with everyone. So you know how we often say, and many people often say, hey, buy the dip on certain things. I was just looking around at the technicals today on all of the big tech stocks. And so this red line now is the 200 EMA, right?
Correct.
Notice that when we're under the 200, and if you zoom out even more, a little bit, imagine just people at home watching this. I want you to start to just put this daily time frame 200 EMA in your toolbox. If you were to buy it under the 200 EMA, it's choppy. It's choppy. It's so choppy. And this is just Tesla. But notice, if you were to buy it under the 200 EMA, you'll be buying lows, right? But the trick here, though, is you have to be in a good company. It can't just be on any company. And Tesla being one of those companies that's potentially good, under the 200 EMA, you could see that if you just kept buying it under that red line, you'll be buying it significantly low. But you need a longer time frame in terms of, hey, I'm gonna buy it now. It might be choppy for the next 2-3 months, but then it'll be green. So notice, look at that red line. This is the daily time frame. I want you to just add this to your toolbox and just go look at different stocks with it that are good companies. Let's switch over to Amazon stock and let's think about the same thing with the 200 EMA, the daily.
Yeah. May I comment on this, Keenan?
Yes.
Well, just interestingly, when we go and look at all the big tech, I'm going to tell you that most of them don't spend as much time beneath their 200 EMA as Tesla has. So Tesla spent actually at least half of its time beneath the 200. And so I like Keenan's point that, if you have been a long-term investor in Tesla, many times you've had a chance to buy it while it's under 200. And right now we're not under the 200. So let me pop up Amazon.
Right. And it doesn't happen all the time. But when it does, it's going to be volatile under there. People are afraid. But notice that on hindsight, those were the times to buy. So we often say the trend is your friend. So you're looking for trends. And even on Amazon here, what if you were buying it under this red line? Now, you wouldn't be able to buy it often or regularly. But when you did buy it, you really caught some really good prices. So then I just want everyone to just look. Open up your 200 EMAs at home, go on your app, whatever it is, TradingView, Webull, MOOMOO, whatever it is, and just throw that 200 EMA on there for the daily. And just go look at the tech stocks and ask yourself, if you were buying it and your plan was to buy it under the 200 EMA, where would you be today? And it has to be a good stock, though. It can't be a company that's not profitable. It can't be a company that's just struggling. It has to really be a good company. Let's just make the final point. Let's use one more stock. Let's use Apple.
May I comment on this one real quick?
Absolutely.
So just as a side note, along the lines of what Keenan's talking about. So this is, it recently came back and back tested previous support. And if it were to have a much bigger move down and were to get beneath, or if it were to get to its 200 moving average right now, that would also align with a number of areas of strategic support right around $200. Neither Keenan nor I are calling this down to $200. I think Keenan's making an extremely important point about strategy of using the 200 moving average as a general guide to getting a discount. You can see that this does honor the 200. When we were back here in 2022, I mean, look at this. It broke down and it went all the way beneath the 200. It went down 51%. So that would be right now, this stock, it would be as if this stock went down to $100 again, which seems very unrealistic and unlikely, but it did just happen in 2022. And so, be patient. What's the next one you want to look at?
Right there. You see that green box that you just put up?
Yes.
Slightly under it, there's a dip below the 200 EMA. What price is that?
So right beneath the 200?
Yeah. What is that dip right there? Yeah. You were just
here or here?
In the past, a little bit. You got the 3 yellow lines. It's under the first one.
Okay. So yeah, that one right there, that's $199. That's $200 roughly.
Mm-hmm. Mm-hmm.
Is that what you're...
A little bit, but if you were thinking like that and looking at it, say, hey, we're under 200. This is when I could slowly but surely add into my position, then you'd be up tremendously. If that was like the one buy that you had. So you see that you have 3 yellow lines. The first 2, between them, there's a dip, like a big drop right there.
Yeah.
Right?
So right here?
No, even more to the more left, a little more left. So you see where it says 1D, Amazon 1D?
Yeah.
Letter D. At
Okay,
the letter
sorry
D.
about that.
At
Sorry
the
about that.
bottom.
That's 152.
Yeah, that right there. So if you seen Amazon and then it came down under that 200, and then that was something that you were using as one, not your only, but one of your indicators, and you bought it there, you would have caught the bottom, right? You would have literally caught the bottom, and then it ran back up to what, 250 or almost.
Yeah,
So
it's gone up from 150 to roughly, we just hit 241. I also want to make this comment about Amazon. Back here, this thing, okay, this is more characteristic. You see how this thing went up? It went far away from the 200-day moving average, and it was so far away, it went sideways for a long time before it came back and began to bounce off it. I want to point out that we're in a more similar spot to that right now. We're far away from the 200. And the truth is, we are moving higher. So that's one thing to keep in mind. This market is not going down right now. We would have to break the low. We'd have to break under 215 to even slightly get bearish. But if I had to make a prediction on Amazon, at most it would be that we could begin to go sideways until we got to a place where the 200-day moving average would get pulled up. So worst case scenario on Amazon, we roll sideways between 240 and no, I would say 240 and 220. So there's a $20 move sideways because we are far more similar to, we're not anywhere near ready to capitulate. That's kind of what I'm trying to make the point. And you can see that when we broke the low, we came back and we broke the low here, that we gapped down to the 200. I mean, if we would sooner have a moment like that where we have a V-shaped move that I could see. So two moves I would see. We come back below 220 and we get weakness. And then we have a V-shaped moment because of some black swan event. But I just want to make the point that as I'm staring at the price action on this chart, it's not even slightly bearish. And neither is Keenan saying that. But I think his bigger point is it does touch the 200. It will touch the 200. It will at some point. Right, Keenan?
that's just how it goes. And if you ever see it, you know that, hey, this is the time that you should really look into it more, right? That should be your signal to look into it more. Hey, we touched it. Maybe it's 2026, who knows? But look into it more at that point, because Amazon it's a great company.
Yeah, I agree.
And Jay, I want to bring up something that you said years ago, maybe a year and a half ago on one of these live streams. And it was actually one of the most bullish things that I've heard. And I learned it from you. And it was a news catalyst, right? I think you watched a news segment or an interview, and it was the CEO of BlackRock. I want to say his name is Larry Fink.
Yep.
And you were saying that he was talking. Tell me if you remember this, or if I'm saying it wrong. You were saying that he was saying the market is going to pump because the government is pumping money into this thing like crazy. It was something like that. And
I could.
What I bet against it. And then when I heard you say that, I looked into it myself, and he was really saying that. And he's the leader of the
BlackRock,
the largest asset manager in the world. He would know things that we don't know. He would know how the government is interacting with asset managers in a way that we don't know. It's not that his word is the gospel, but it was just an overly confident air to him when he was saying that. And then they were starting Bitcoin ETFs, aka going risk on. So I was like, oh yeah, the market's gonna pump. And the whole 2024 was absolute rocket.
Yeah, no, I'm with you. I agree. And just to that point, it's one of these candid moments where he was going back and forth. And Mo, I'm going to come to you in a minute. It was one of these candid moments where he's going back and forth, and they were asking him about between now and 2030, and he finally just, it was like a moment of honesty. He said, we're printing and spending about $1 trillion a year. We're on pace to do that. And it didn't matter who was in the White House. It did not matter. Trump, Obama, Biden, it did not matter. They all were spending the dough. And someone will tell me in the comments, well, Doge is cutting. Trust me when I tell you that they're only cutting to justify spending here shortly. We have a White House. We've got Washington, as there is no fiscal responsibility anymore. And the long game is what BlackRock said. Larry Fink said, how in the world are stocks going down when our leaders are spending and printing $1 trillion a year in this economy? I don't think that Donald Trump came into the White House to play it safe or be conservative. He's a businessman. This guy is all about making business and spending money. So he's going to continue the theme that Larry Fink alluded to, which is to spend, spend, spend. He's demanding the Fed lower rates so that the economy can go back into blitz mode forward. You're going to have to get used to the higher price of food, cost of eggs, cost of gas. None of it's really going to go back to what it was. It's going to be the new normal, and and the fact is, it wouldn't even shock me if you began to hear the idea that 2% was unrealistic, that 3% is the new 2% inflation. Real quick, before I get to some hardcore stock picks, Mo, I'd like to get your reaction on what we were just discussing.
Well, with you look at the government, how much they're spending, 6.9 trillion last year. This year, remember, we have had a whole red wave. They're going to take care of the spending. They spent 6.9 trillion last year. They're already penciled in for over 7 trillion this year. In other words, what you said, Josh, doesn't matter who's in there. Left, right, they're spending. The printer's on, and the markets, when you have that much spending and it's not going backwards, and we're going to have a monster amount of tax cuts coming, and we could lower the corporate rate. Wow, the market is primed to rip higher. Yes, we had a lot of FOMO in there, pushed it up. You're seeing a little bit of consolidation, profit taken by the millionaires, billionaires, and policymakers down in DC, and retail suffering. But the truth of the matter is this. We are in one of the best times ever. If you look at the macroeconomic situation, the money, the supply, the Fed, the Treasury, SEC, look at it all. Man, if you can't see that picture clear as day, the regulations that will be changing for crypto, the Fed and what they have to do policy-wise, then buy the right asset classification to take advantage of it. I don't know subscribe to the channels. We're going to do all the homework. If you can't see it. We'll just give you the answers to the test, because that's how clear I see this. It is crystal clear. Follow the money. Follow your leaders in Congress, in the White House, left, right. You will see as they start loading up, and you're like, what is that company? Oh, 3 months later, they got a monster contract. So you can do a little coattail riding, or you can do what I do and look at all of the boring data coming out and realize, man, this market isn't going to slow down one beat. We got unemployment at near 4%, government continuing to spend more, M2 going higher, 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 and the Fed is close to going to quantitative easing on the balance sheet roll off here in just the next couple of months. Folks, buckle up. Crypto's going to blow up to a point that's disgusting. And yes, it didn't happen yet because the regulations aren't changed. The SEC hasn't gotten everybody in position. The spot ETFs aren't all done yet. The staking for Ethereum, which I've been telling you for months to get ready, what do they got tonight? You saw it, man. The guy from Bloomberg coming out and saying they just filed to have an amendment to have staking allowed for Ethereum. It's popping. So as these things continue to line up and we get the positive catalyst we want, we should all be able to sit here and make so much money. Look at the right assets. Look at banking. We're going to have deregs coming left and right over the next 4 years. You got banks that are now allowed to be custodians without having it on their balance sheet for crypto. Massive fundamental advantage now. Once the regulations clarity come from the SEC and we get the friendly people all writing that up, David Sachs coming in there, cleaning the house, Uncle Paulie Atkins, oh man, let's go. You are going to see so much money flowing into that asset. crypto. You're going to see the banks being major players. Look at those two. You want some more? Energy's been beaten up so bad that it's almost, I feel guilty buying it because it's such a steal. So I have a lot of plays. I see it. I feel like there's tons of money to be made. Family, get set, man. Because I think
Well,
I see a lot of positives.
I'm feeling Mo's energy. I'm getting excited to be an investor in 2025. Let's get into it. So I want to give you my robot picks tonight, and I want to take the advantage of having these two guys on the show tonight and to get their reaction to it. Tesla was the first one, and Uber is number 2. Now, I'm just going to go over some general stats. I will take a sneak peek at the Uber chart and give you my final prediction here in a moment, and then I'm going to get a quick 60-second reaction to them. Guys, we're going to blaze through 3 picks here right off the bat, 3 more picks, and then we're going to slow things down. But let's just talk about the fact that Bill Jackman bought a huge bag of Uber. Here's a billionaire doubling down on Uber. Uber, there was this idea that autonomous driving would take away from Uber. Absolutely insane, not even close to true, because the only thing that could make Uber better would be to get rid of the driver. Now, personally, it makes me sad because I know I'm aware that there's a lot of immigrants that come into this country, and Uber was one of the best opportunities for them to have a hustle and to start immediately making money and pursuing the American dream. And so we have to innovate and think of new ways for people to participate. Having said that, Uber stock is cheap right now because the whole story is yet to crack open regarding the fact that they're going to lower their costs. And what does that do? It's going to wildly increase their profit margins. And there's some billionaires taking early positions. They had a huge recent earnings beat, and it sold off. But you know what? That was just a panic moment, I think, to push out retail. The revenue was 20% above the forecast year over year. So they weren't just mildly, it wasn't a mild beat. They had a 20% greater than the forecast year over year. They did give weak guidance, but it actually is higher today than since the earnings. And so very rarely do you see a company give weak guidance. It just shows you what a strong interest there is in Wall Street taking a bet on this right now rather than later. I'm going to encourage you guys, and I'm not going to tell anybody what to do, but you don't want to be getting into this when CNBC begins to cover it night and day. You know, honestly, there's some sneaky investors because when it flushed down and they were basically poo-pooing the company and it's already higher than after their earnings, which were supposedly a disappointment, which made no sense. It's telling you that people are interested in getting into this. So they have a partnership with Serve Robotics to partner with Uber Eats, and they've got a Waymo integration partnership on the table right now. And so these companies like Waymo and Tesla are not going to be taking the place of the technology. If they're only going to get on board with the overall platform that's going to continue to provide the need, whether it's a guy in his car or whether it's Waymo or whether it's Tesla or whether it's food. The fact whether it's food coming out of the trunk with a Waymo, with a Serve robot that pops out of the trunk of a Waymo car, this is going to be one of the biggest companies in the future. So I would tell you that I'm going to get into the chart and I'm going to give you my prediction. I'm going to hold off. It's all about getting rid of the labor costs. Everybody knows I've been in business. I've owned businesses. I've had a fair amount of employees over the years. Your number one expense is always people, and robots offers this tech company the opportunity to essentially eliminate that. Then they have 4.9 billion last mile deliveries by 2030. So, you've got Amazon, right? And one of the things that they've done to sort of steal, packaging market share from everybody else is to get into their own distribution. They took it from FedEx, UPS, and it's the hardest delivery is that last timely delivery. And this is where Uber is going to be king, especially with these partnerships with Waymo and with Serve. So let's take a quick peek at the chart, and I'm just going to point out where I think this is going and when it's going to get there, and where would be an ideal spot to buy. I'm going to keep it very, very simple. I talked about this Recently, I predicted, actually, I pointed out just a couple weeks ago that on the MACD daily time frame that there had been printed a buy signal. And I think it was actually right here on this candle. I said, we got to buy. No, I'm sorry. It was right here. But right here is when I told everybody, this has got a buy signal. If we get above 68.50, we're going to absolutely blast off. And
Josh, is that red line still the 200 EMA, the daily?
It is.
Wow.
Yeah. To
Wow.
Keenan's point, we all just had the opportunity to buy Uber here under the 200-day moving average. Let me double check to make sure that it is, but I believe it is. Yeah, it is. So we all had the opportunity to buy this between 68 and 62.
Wow.
And in literally less than 4 or 5 days, this price has been pushed up all the way up here to around $80. Now, honestly, this thing dipped and it got bought right up. And I can tell you that this is going to be a $100 stock. And the first target's going to be this top line, somewhere here between 90. Now, I would tell you that it wouldn't shock me. I pointed this out on Apple years ago that we had a top line resistance that we were likely to hit. And when Apple got up there and hit it, it blasted right through it. And then it spent about, 2 or 3 months consolidating back and then using that as support. It's kind of my belief that same thing's going to happen with Uber. I would say that a likely target is this red line, but that's going to be a spot where, again, a bunch of technical guys like me are going to be thinking it's time to sell. And I wouldn't shock me if we shot right through it. So I'm just letting you guys know, you're all on high alert. My prediction for Uber this year is $100. And if we get any opportunity, let me just put it in here for you guys. Give me a minute. To me, this is the buy zone. That's it. That's the shelf. Anywhere from, I would say, 73 to 78. I'm going to be actively buying this zone. And I don't want to, I'm bullish and you guys can sense my bullishness. But, I'd hate to be up here celebrating and reminding you guys about what I said, 3 months from now. Don't make me do it. I'm going to come out here and tell you I was right again. Don't make me do it all by myself. I need someone to buy even one share of Uber so that when I'm back here 3 months from now and this is a $100 stock, me and you can celebrate.
I'm with you, man. I'm with you. I want to say this too. So one thing that I was thinking about Uber, right? I had seen a few YouTube channels years ago and they were so convincing. It was like people who are lawyers, people who are great economists, and they were saying when the robo-taxi network like really fleshes itself out, what's going to happen is people like Uber, companies like Uber are going to suffer, right? So they were betting long against Uber. But when you look at it today, you're thinking to yourself, you know what one of Uber's biggest assets is in terms of why would Google, Waymo partner with them? Why would they partner with them? Why would all of these other companies partner with them? And it's the same reason why companies partner with Meta. And it's access to you. You probably have a car, but you probably also have the Uber app and you're signed in and it has your credit card information. But you're probably not signed into Waymo. You probably don't have a Waymo account. You might, some people do, but you have an Uber account. And guess what? That is super valuable to a company like Waymo. They're like, hey, we have the technology to drive you around the city in a self-driving car, but we don't have people on the app. So if we compare it, then we're just going to bite the bullet and just pay Uber to pair with us. And that would boost them both up. So it's kind of like a synergy. Synergy meaning that the two pieces together are greater than if you added them up together. It's like they multiply each other. So that's something to really keep in mind. But also, I just want to just double down again and say, I'm not saying you should always just buy it under the 200 EMA. The company has to be good. The future for the company has to be good. But that seeing Uber under the 200 EMA and then pop up like that, like, wow. I tell you, I didn't pay Josh to pull that up. I didn't.
Hey, let me just, obviously, Uber is literally now a verb from moving from one place to the other. If I'm meeting up with Keenan and Mo, I'm going to say, hey, I'm going to be over there in 20 minutes. I'm going to Uber there. Everybody knows that. So they've got the recognition, and that's a huge piece of the puzzle. They've got the customer. Now they'll add the technology, and then they'll add the money, and there'll be plenty of people who will give them whatever billions of dollars they need that'll buy into this new phase ahead of Uber in the coming years. So they're not going to lack. They got good management. It's been great management for years. It's a well-run company. They're going to figure this out. And I personally think that, not to get crazy, but end of 2026, I'm thinking this could be a $200 stock. Right now, my target for 2025 is $100. And we'll see if we get there. Mo, before I move on to my next pick, do you have any comment or contribution for Uber?
No, that's not one I'm following very closely. I'll let your expertise carry the weight on that one, and I'm sure we're going to come back once it's over 100, and there'll be a lot of smiling faces.
All right, the next bad boy is actually one that was referenced when I was talking about Uber, and that was Serve Robotics. Now, Serve Robotics is interesting. They got these dorky little square boxes that roll around the streets of some cities, similar to you occasionally see a Waymo car in certain cities. You can see Serve Robotics. And it's the type of thing that homeless people, think is spying on them. There's a funny TikTok I saw of a homeless guy kind of convinced that this little robot that was passing him every day was, plotting on him. Serve Robotics, though, robots are huge, and nobody paid them much attention before the age of AI. But the fact is that now it's an absolute game changer, and Serve Robotics is in a lead position. So these guys are sort of like, when it comes to robots, they're kind of like, I feel like a Palantir. They're doing the right thing at the right place. I want to remind you guys what I've said about Palantir, and I'm going to apply it to this idea behind Serve Robots, is that AI enables people to go out. AI is a gold rush. NVIDIA sells the picks and shovels, and it allows guys to go out there and explore the world of money-making opportunity through artificial intelligence. And companies like Palantir are part of that because they have to protect what is built, right, with those NVIDIA chips. Well, NVIDIA is an investor in Serve Robotics. These guys are investing and giving them the top technology. So they're using their advanced Jetson Orin technology to really kind of explore what these can be used for. They're early. And when I show you this chart, there's two charts that I think are just fascinating, and Serve Robotics is one of them. The chart is really showing systematic buying. And while everybody's sort of ignoring this particular stock, it's just creeping and creeping and creeping. And I'm going to lay out sort of the target and support and the next potential buy zone here for you in a minute. But I want to remind you, these guys are partners with NVIDIA. NVIDIA is investing in Serve Robotics. They're using the front edge technology of NVIDIA. They also have partnered with 7-Eleven. So they understand the need to get out there and actually make some money. And again, it's that what's referred to when I was talking about Uber, it's the last mile deliveries. Serve Robotics are the ones that may literally come out of the Uber and take your lunch directly to your door. It's going to be through Serve Robotics one way or the other. Now, here's the other interesting thing. This is not a profitable company. Obviously, Uber's a profitable company. They're a negative 0.87 cents earnings per share. They're not profitable, but we all know that when they finally move to a place of profit, that's when the story gets really interesting. So this is definitely one to be watching. They're also partnered with Shake Shack, and they're going to be delivered via Uber Eats. And their goal is to have 2,000 new robots on the streets by 2025. They're the bear case on this company, and I'm not telling you just to go load up your account with this, but I'll tell you how I'm handling it. I'm nibbling. I'm going to be a nibbler on Serve. I'm going to buy some now. I'm going to buy some when it dips. I'm going to consistently build a position in. I want to say that when this company was emerging, which I believe it's emerging right now, in all of 2025, this is one I'm going to buy, a little bit every day, maybe $10 a day. I'm just going to put it on autopilot and just let it accumulate a position. I'm not dropping big bags on it, but I'm going to accumulate. So if it goes up a little bit, fine. If it comes down a little bit, I'll get a better average. But let's take a look at that chart real quick. We're going to have to pull it up. We're getting there, guys. All right. So I just want to point out, I want to mention this idea of point of control. Because you can see that this opening price, when this company went public and it had this massive run up, this candle is the absolute point of control for this chart, and I'm not going to go into a teaching mode, but that's fascinating. You can clearly see that, it had this dip moment, right? And eventually gapped back up into the channel. It got a little bit too excited, right? But eventually it came down, and it's been steadily on what I'd refer to as a trot, right? Takes an occasional break, but then goes back into the channel, tests the high of the channel, then it kind of goes back into a trot. So I can tell you that just the same way that I'm talking about accumulating this play, others are. It's not terribly expensive, and it wouldn't shock me if in a bad moment this came all the way down to $12. But if we zoom in, here's the basic idea. Your structure is going to be this ascending channel. If we come out of the channel, if we come out of it, in my opinion, that's a time to increase your buys. Kind of similar to what Keenan was saying about buying under the 200-day. Buying outside the channel is more appealing than buying in the channel. But the fact is, we're still moving along, right? And I just want to point out, if this price action breaks above $20 right now, this is actually a pretty strong area of resistance. Now, it got defeated here, 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 and here. So that's a lot of times banging against this $20 door. So $20 is a psychological level. If we can get back above $20, I personally think we're going to shoot up above $26, and we're going to be at the top of this channel for a while. So if we don't, then we come back to the bottom of the channel. And in my opinion, I'm not going to I'm not going to buy a big bag. So I'm not going to use this 1770 as a stop loss. If you wanted to do a swing trade, that 1770 is a reference. I'm personally going to be a buyer whenever this falls below the channel, because personally, and I see this as being hot, price is compressing, and it wouldn't shock me if we had a big move all the way up to $34 on this. They're just waiting for a surprise earnings statement or a couple new partners. Let me come back to the guys and get their reaction on Serve Robotics. Any thoughts, you guys, on Serve Robotics?
None for me. I'll let that chart be everything.
I just colored. I was coloring all over the lines on that bad boy. Keenan, any thoughts on Serve?
Yeah, so with Serve Robotics, again, I like it. It's one of those plays that is more of a long-term idea, right? It's more of a long-term idea. It's not one of those things that just play out in a week or the next day, because there are a lot of regulation behind what robots can be able to do or what companies can do with it. So I say, I see what you see, Josh. I really do. I really do. And I actually pulled it up just to see again, right? And I see under the 200 EMA, that's $10, all the way from $1 to $10. And I'm just looking at these things and internalizing them with the chart and reference. And with Serve Robotics, I seen that was some of the funniest videos on the internet. With people
right?
playing around with those robots that are just driving by. I actually seen somebody try to rip it open, and the robot's just like, get out of the way, dude. And it's just crazy. It's just crazy stuff. But again, the future is automated. The future is automated. There's a story about how, like Josh was saying, where people are often, the payroll is the biggest expense in companies. And what companies often do is they try to get more and more efficient. So I'll use Meta as an example again. Years back, they actually bought a high rise, not even a high rise, but a skyscraper in Texas. And they've been paying the rent on it for years, but it's totally empty. And I say that to say they've been downsizing, so they don't really need to put people in there now that we have the AI revolution. And it's cheaper for them to pay the rent on an empty skyscraper than it is to put employees in there that they feel that they no longer need. So the big companies, love it or hate it, they are trying to downsize with people because they don't really want to pay people. And you could fight it, but you could also try to make money from it. So back in the day when Henry Ford and they started to have the revolution of like just cars, and everyone had a horse. There were people who had jobs surrounded around horses. Maybe you were the guy who cuts the horse's hair or puts new horseshoes on the horses. And there's just so many different jobs around. You clean up the poop on the streets. And now you're fighting cars and car factories because you're like, we're going to lose our jobs. I'm the guy who puts the horseshoes on the horse. Instead of fighting it, you say, how do I buy into the company that is selling cars? Because I know that horses and horse related things are going to be outdated, and companies are now going to go with vehicles. And now we're in the same space where they kind of trick the kids. And I hate to see it. And tell me if you've seen this too. For the last decade or so, Mo, you've probably seen this too, being a teacher. They were telling all of the kids to go and learn how to code, go and become a coding engineer. And then in the last 2 years, we've seen the largest wave of layoffs of people who know how to code in tech stocks, because they told all the kids to go and do that. Now there's a surplus of them, and now AI can code. ChatGPT, and one person who has ChatGPT knowledge and coding knowledge can do the job of 50 people from a year prior. So with that being said, what does that mean? That means that instead of betting against automation, you should buy into automation with good companies.
Thank you, Keenan. I think that's a lot of wisdom. I hope you guys listen. Now, listen to me, guys. I got a couple questions for Mo coming, and then I've got a pick that Mo's going to give us, and I'm going to give you my last pick that I want you guys to be looking at that I really like. This is for long-term investing, but I refuse to give you those picks unless we get the likes to 1,000. There's almost 2,000 people watching. But I only have 700 likes. So let's get a pop right. Let's get that like booked in here. And I promise you, I'll give you the pick. While you guys are popping those likes up, let me just, there we go. A big burst of likes. Let me just quickly answer Christina Vera. Mo, I'm going to throw this question to you. Thank you for your generous super chat. She says, do you see ETH hitting 10K next cycle with the ETF staking getting approved? 21 shares just proposed staking for their ETF.
Yeah, come on now. You say next cycle? I'm saying this cycle, man. Are you kidding me? Listen, you have Standard Chartered out there, and it's a very, very large international financial institution. They have called, and they have been very spot on so far. And they said, look, we get a red wave, and they were calling us before the elections, that if we see a red wave, Trump wins, we are estimating that the overall market cap of crypto will be at roughly 10 trillion or more, possibly, by the end of 2026. There are others that called for 15 trillion. So very, very knowledgeable people in the industry calling for 10 to 15 trillion market cap. That means triple of what we are right now. Bitcoin would be over probably 300,000, I would say. And then you say, what about Ethereum? I thought we were going to hit 10K. Triple Ethereum only puts us at roughly 8,100. Triple today, Mo. Well, no, hold on now. We know that Ethereum has been absolutely lagging and has a chance to do some wonderful things with exactly what they just said, staking. It will become one of the most powerful ways to invest in the world. And it is, think about who has a ton of it. Who has a ton of Ethereum right now? World Liberty Financial,
Yep.
Trump's backed companies. They continue to load the boat. You got Eric Trump himself, I don't even, say what you want, coming out and saying, thank me later. Looks like a good time to load up on Ethereum. Now, why would you say that? Because people that have all the money want all the love as well. And he's trying to help people out there, because I think those in power know what's going to happen before us little retail ants do. But we're not dumb here. We got the research, we got the experience, we got the capabilities to make millions. And I believe that Ethereum is no longer going to underperform Bitcoin. I know Bitcoin's absolutely crushing it, dominating. I got a couple of them myself. But Ethereum is going to shock the world as we go forward, as it no longer is the little baby puppy getting kicked around, and that it actually starts to come back from that disparaging Bitcoin. Come on, what are you doing to me? Just killing it, right? So I actually think, I think because of the power basis, they're going to institute Ethereum into the government ways of doing things, just like they did with computers back in the day. And Ethereum is going to be a large part of it because it's going to benefit Trump and his family and those around him. So when they try to pick the blockchains they're going to work with hundreds of millions of dollars, if not more, tied to this with all their buddies, probably in the billions, Ethereum's the one I believe, based on what they're doing, they're going to go with. So I believe staking is going to be a big catalyst. I believe the government's going to start using blockchains more, and it's going to rely on Ethereum. That's what I think.
All right. Well,
So
here
we'll
I got a question for
see
you,
what
Mo.
happens.
First of all, I and Mo agree on this pretty strongly. I mean everything he just said. But I got a question for you, Mo. I want to know about your profit taking. Now, personally, I'm not terribly greedy. If I'm up on anything 100%, I feel justified to take some money out of the system. Now, I have a feeling that I'm going to be one of the first people that sells my Ethereum. I recently came out and said I was going back in on Ethereum, and it was for all the reasons you just went over. We just have, these Trump boys and, Junior.
Can't go against it.
Yeah, you can't go against it. Junior put out a tweet that said, buy Ethereum, thank me later. And then about 15 minutes later, it got taken down. I'm going to tell you why it got taken down, because his lawyer called him and said, you can't do that. That indicts you. That implies, that ties you to some decisions, meetings, and some people. You can't put that dotted line. But it's just too much opportunity there. Now, also, it's an easy place to park big sums of money because it moves and it's less volatile. So having said all that, I'm on the Ethereum train, and I'm going to tell you that I'm happy to get off. I'm not as greedy as some of you guys that think like, this, that, or the other is going to 100x. It's a legacy coin. So if we were to get 200% from here, I'd be saying thank your lucky stars and cash out. Personally, I'm going to be selling. If we got 100% from where we're at right now, I would be selling. But I'm just curious. I want to get right into this next pick. I will not give you my next pick because the show's already been rich enough with content. I don't think we got to go any further. I'm working these guys here to the bone. It's already been an hour show. I will not give you this next pick unless we get these likes above 1,000. You're not far. But let me ask you, Mo, and really, I mean, just shoot me straight. First of all, are your bags of Ethereum full right now? Which means, are you going to buy any more? Because it has come down. It's kind of attractive right now. Are you going to buy any more, or are your bags locked and loaded?
I'm loading the boat, and I say that, and Josh, I'm a straight shooter. I've been selling stocks to load crypto. I'm loading Bitcoin. I'm loading XRP. I'm loading Ethereum. I'm going for it. I'm going for the kill. And
all right.
if I miss, I'm gonna lose hundreds of thousands. If I hit, I'm gonna make millions. I am not the kind of person who's happy making 10 to 20% a year. For those who have followed me, we hit the Grayscale Trust when it turned into the spot ETF. I made almost 6 figures. We've done leverage portfolios, made 6 figures. Oh yeah, there's been a few plays that I don't hit, but man, maybe I lose 10 to 20K. For the hundreds of thousands that I have made over the years on different plays, it is time to go for the throat on this one. I have never seen it any clearer than I see it right now. If Trump follows through, and you got Sachs down there, David Sachs following through, you got Paulie Atkins following through, and of course the SEC doing everything I believe it's going to do, man, I can't see this getting any easier. You tell me an asset class next, besides financials, that probably, and they won't even give you this kind of bang for your buck, that you have a chance where we're saying, oh, I'll sell at 100%. What, you mean under a year? The average investor, you're lucky to double your money every 7 years. And we talk about like a year's a long time. People lose track of how long the rule of 7 takes, man. It is a long time before you normally double your money. I think we're going to be able to double it in a year. I think we have a chance to triple or quadruple your starting funds in possibly 2 years. And that's based off of Bitcoin and Ethereum. It's not some wild altcoin. This is it. And once it happens, then you're going to actually start to slow down, where you're going to get correlated to the actual stock market, and the gains in crypto over the next 10 to 20 years from now will start to actually replicate what you get in the stock market. So this is a once in a lifetime opportunity, where those in early willing to take the risk, intestinal fortitude check, they're the ones that are going to make the money. And if we're wrong, you got to know you're going to lose a ton.
I got one more question for you. You guys did bump us over 1,000 likes, which I appreciate. Thank you so much, community. And I'm going to answer a question, and I'm going to give you one more pick. And then if Mo wants to give you his pick, if we still got time, then we will. But I got one more question for you, Mo. When are you going to unclutch that ETH and sell any? Give me, or will you sell any early? Is there a
Oh,
point?
come on, man. You know if that I follow the Bollinger Band just like you. I follow the RSI just like you. If we get into a point, I will peel pieces off. You know, I'm not saying, oh, I'm selling everything because it just broke the Bollinger Band. But look, if we have a wick that blows through the top and we know the information, you play the macro, you play the technicals, you play the fundamentals. You know, I sold, we had H-bar. That thing was up so much money for those who were in my Discord. We killed it. We were up easily triple digits in the percentages and made bank. I sold it, I think, December 2nd, December 3rd, when we blew through the Bollinger Band all the way at a nasty level. And at that point, I sold most of it. And then dollar cost averaged into a lot of different plays as we went forward, man. So you know what? You either have it or you don't. If you don't, you don't want to go all in. You don't want to take chances. Crypto's not for you. But man, if you're ready to ride the ride, you want to rip the waves, hey, come on over and go with me because I'm going all in on this. All right. So in 5 years, I'm either going to be sitting here with millions and millions, if not tens of millions of dollars, or I'm going to still be out here putting my videos out and enjoying the conversations. Either way, I'm going to be happy because I'm already happy in life. So this is a challenge to me to try to help make other people millionaires. And I'm not joking about that. And that's truly how I feel crypto is going to be over the next probably 2 to 4 years. We have the biggest opportunity ever, and I'm going to take advantage. And Josh, my play is CVE. I bought 60K today. We're coming off some really low levels. You got oil starting to move higher. Gas is moving higher. Nice Canadian company. You got a PE of around 11 fundamentally. It's fantastic. It's priced under what those in the industry are. So I loaded 60K in 1507 price. So
all right,
there's my play.
First of all, you're crushing it. Both of you guys are. I'm loving this live. You know, when we spend time, I call this CEO time, and it's giving me ideas. You know, I mean, this is not just for the folks listening out there. We're processing things together. We don't plan these dialogues. You know, everyone brings what they want to bring. Thank you for the CVE. I'm gonna go through 3 more things. We're gonna go through CVE chart. I'm gonna give you my next pick, and I'm gonna answer a question for Michelle. So stay connected. We're gonna move fast, guys. Thank you for bumping us over 1,000 likes. Michelle gave a super chat. Thank you for that, brothers. Love all your videos. What is your take on PRZO? PRZO is a drone company out of the EU that also can do work here in the United States. I'm going to come over here real quick and show you guys the chart. You're looking at 2-day candles. I gave the buy price of $1.15. Okay, and look at that. It literally hit the low of this candle is $1.15. And you say, well, did you put that price in after it hit? No, I gave that price way back here. So I've been suggesting that when we lost 148, my stop loss was at 148. I said, if we lose 148, then we'll come back to 115. That's where I'll buy again. Now, this is a very bullish stock. The fact that we're above the 0 line on the MACD is an indication that it's in the hands of the bulls. 100%. This is in the bulls' hands. Now, when the stock crosses, it's above the 0 line, and the blue MACD line crosses beneath the signal line, that means that it's a hold. Okay, so right here at this candle, it was a hold. But when that blue line crosses back up, when the MACD line crosses back up, the orange line, that's a buy. Now we're waiting on that. And if we get a cross up while above the 0, it means that the move will be very strong. My projected move for that is a minimum of a move back to 270. But I actually think that we're going to get something better. I believe that we do have a channel forming here. And I believe that it wouldn't shock me if we come and we back test this channel. When I say back test it, I mean that we test it from the bottom side and possibly break into it. Now, that's a very, very bullish scenario, okay? I would tell you that I've been very consistent to run stop losses. I bought some today. I didn't get it at $1.15 because my limit order actually just didn't fill. So it must mean that there were other limit orders in there and it didn't pick up every order. That's all I can imagine. So I had to buy it at around $1.30. Now it's sitting at $1.32. I'm going to put a stop loss at $1.10 underneath this. And so if it breaks down, then it means that there's things going on that I don't understand, and it could come all the way back beneath 90 cents. Having said that, I'm going to give it the benefit of the doubt. I'm having looked at the MACD, which still remains bullish, and I'm going to say that you have a strong buy signal when you get a cross back up, which we don't have yet. But I think this was a viable moment. If we curl up, it's probably going to continue to climb. The signal for, I would say, doubling your position would be a move back above 177. That's when this really gets interesting. It consolidated there. That's resistance. So if it breaks above it, it should move pretty strong. It should definitely go above 350 is kind of my estimation. Now, having said that, you say, well, Josh, do you like this as much as Mo likes ETH? No. This is a small play for me. This is an under $2,000 investment right now. So this is a small play. I'm dabbling in it. Small cap, small position size. Who said that? Mr. Larry Jones. All right, let's get into, I think he's the one. I got to give him credit for that. All right, let's rock and roll. My next pick, and this is for serious investors. If you're at the level where you're trying to grow a small account, PRZO is the thing to look at. And some maybe Ondo, right? Another one I really like. These are great little projects. If you're trying to grow a small account and all you've got is under $1,000, to do it, and you're willing to take high risk, well, you could do it with something like PRZO in the stock world. You could do it with Ondo in the crypto world. Having said that, this is a more big boy, big girl stock pick, and that's Reddit, RDDT. These guys fell today, and that makes me excited because I've been wanting to get in on this. Now, they had a double beat on their earnings, but it flushed down. And very similar to Uber, I really don't think it's going to stay down very long. So this pick is extremely timely. I would say take Reddit very, very seriously because just to give you the storyline, they've got 20 years worth of incredible database of information and data, right? And they're getting into, this is going to open up as they pair that with AI to really create a lot of knowledge, not just for them, but for other companies. They can sell that data and they can use that data and it can cause them to enter into a time frame where they could be a big tech company. They have recently gotten to the place where they have 100 million daily users. And so Reddit's been considered sort of a smaller tech company, but that's getting above 100 million daily users is something that people are paying attention to. Now, the big story is when you have those users. Keenan and I talked about that with Uber earlier. The big story is when you take all that user data, which it's just been whenever I'm looking for an answer to a complex question, I usually find that answer nowadays on Reddit. I mean, so many times you've got an expert or somebody who's dropped the clues to what you're trying to figure out, right? They're going to take that information and they're going to process it through AI, and it could be a rival to companies like Google and ChatGPT. They have a lot of knowledge deep within their data servers, and this is going to open up for a new age of opportunity. So earnings per share, they actually hit 0.36 versus the estimate of 0.25. So they crushed it. Revenue, they hit 427.7 million versus the estimate of 405 million. So they did really, really well. And so their users were up 40%. That's not a small jump. Their revenue growth was up 70%, and their gross margins were up 90%. So this is a company that I've really been wanting to get into, but it hadn't pulled back. And so now that it's had this sell-off, it's time for us to pay close attention to it. Let me quickly show you the chart. And I'm not going to spend a lot of time on this. We're going to wrap up this show. But you can see, again, very interestingly, point of control has been and likely will be its opening price. It's really been in a ascending channel from the day this thing launched. and we are above the top half of this ascending channel. Now, I'm going to pop up the 12-hour chart so you can see the dip that we just got. All right, let me pull this up, guys. So look at that dip. Now, I want you to know that I charted this before earnings. And so when I marked 176 as my target buy, you guys just have to take my word for it. I put that in before the earnings event. And lo and behold, that's exactly where it pulled back to and bounced. So I'm a buyer of Reddit right now on this pullback and bounce. And if we take a step back and we look at the big picture view, the day this gets above 231, my fib target's going to be 264. And in general, this chart is just so freaking bullish. Let me take a step back. I don't see any reason why the story changes. They did extremely well. Their users are going to go from 100 million to 200 million with the adoption of AI. And I honestly think that every little dip. So right now we got to the bottom part of this channel. We hit 176 and bounced. And personally, I think we'll stay down here for a little while. And then we're going to end up getting back to the top half of this channel and continue on to 264. So tomorrow in the Discord, I'm going to talk to the community about some leaps on Reddit, taking advantage of this pullback. And like a lot of things, I'm not going to go in, all in tomorrow. We can buy these a little bit over time. Give it a couple days to process the pullback, but we definitely want to pick one up tomorrow. And on that note, guys, you're getting daily plays from me over in the Stock Squad Discord, and it's in the top. The link is in the description of the video, and that's where you get something from each of us, the members of the Stock Squad, Mo, Keenan, Larry, and I. And so I'm going to drop some additional details on Reddit there tomorrow. So go ahead and click on that link and join that community. I think it's very fairly priced community, and you get a little bit of something from all four of us. That's it, guys. Before we head out, first of all, I want to thank you guys for joining me. I think that there was some great and interesting technicals dropped here. I got more bullish on ETH after Mo was talking. He got me more bullish on ETH. I think I'm going to go buy a little bit more. And I hope you guys seriously consider some longer term investments in a couple of the picks that I gave you today. There's a couple more stocks that I had in my bag that I wanted to talk about. Well, you just have to check out the videos. If you guys are actually not subscribed to these two gentlemen, you need to head over to Keenan Grace and Stock Mo and Stock Up with Larry Jones and subscribe, because that is the Stock Squad, and we make each other stronger. It's really great, in this world to have some guys that you can call and talk to about investments and things in life. This is my group, and I just want to thank you guys for being here tonight. And what are your final words, Keenan?
Final words, join the Stock Squad. When Palantir was like $80, maybe even $90, I had put in my section, the Sniper Sunday section, that we will play calls on it. And that thing is up like 1,000%. So make sure that you tapped in with Sniper Sundays on the Stock Squad. And Josh, thanks for having me on. Mo, good to see you. Larry, family, coffee cups in the chat for Larry, because if he's in the chat and he's watching this, just know we always got him in mind. We always got him in our hearts.
Thank you. Mo, final word for the fam.
Let's get rich, man. This is it. I told you, rewind this video, watch it 17, maybe 35 times. Get ready, do what you need to do, and take advantage of a lot of the information that was given today. I mean, the picture's, it's clear. It's up to each person to do your own due diligence. I'm ready. I'm loaded. I'm finding other cash to put in. I'm ready to become a multi-millionaire. Hopefully you are too.
I love it. I love it, guys. There's so many comments. I would love to scroll through this. Centric is shouting up Stock Up U. Stock Up University is Stock Up with Larry Jones class. So I would say go over to his page, and there's some classes from me in there, Keenan in there, Larry in there, and a lot on crypto. So, we'd like to support Larry while he's away right now, and it'd be a great idea to invest in his class. And find us all in the Stock Squad. We appreciate you guys joining us today. I thought it was a great show. Thank you guys again. Peace and blessings. Take care.